Hello and welcome to today's FatTel Daily video. I'm joined today by my good friend Callum Newman. Callum, welcome back to the Southern Hemisphere, mate.
It's good to be here. As you know, the Middle East conflict is flaring up, and that's right through the path back from Europe. So I've just come back just before all that's really got going. So very good to be back.
Good. And yes, but there's conflicts everywhere. There's lots of stuff going on in the world, but you're not really phased by it. In today's FatTel Daily, you actually end the piece with how bullish you are about the next few years. Part of that, you say, is because of the developments happening in AI, and you use, even though you're the small cap guy around here, you use the example of a big blue chip company, the Commonwealth Bank. What's the story there, Callum? Because you noticed there was a big 30% surge in the share price year to date, and you say it's a lot to do with AI.
Well, yeah. Well, first of all, just on the war issue, it's interesting watching the price action today. I'd say the market's gone into wait and see mode. The volume's sort of not there, but there's no panicky selling or anything like that at the moment. So hopefully that situation's contained, certainly for the people that are involved and the countries, but also for the wider world on that front. In terms of, okay, why am I talking about CBA today? So one of the features of this year has been the big surprise rally in the Australian banking sector. And I know for a fact that you go back 6 months, most of the analysts were saying, well, look, there's no earnings growth here. Property's fine, credit's kind of picking up, the debts are low, but there's no real big earnings growth. So there's no reason to expect a big surge in the banking sector. But that's what we've got. And I think the only rational explanation is to justify this or go, well, what is the market seeing that most of us aren't? And to me, it's the development of artificial intelligence and what it can do to their cost base. And there was a story recently in the Australian Financial Review where Commonwealth Bank is tabling replacing their customer service agents. So they'll probably start off small, but they're going in this direction with AI. So you will log on to the CommBank AI and interact with it, and it will answer with you. And the numbers are huge. I think the figure was if they cut the customer service agents in half, they save something like $600 million. I mean, it's a huge amount of money. The CEO of Telstra right now is going out with their 2030 AI roadmap, if you like. Of course, they're going to play a big part in it with all the data centers and the connectivity. And again, it's clear that the Telstra workforce will be displaced in some way. Now, there'll be other jobs that come in, but the basic roles are going to get consumed. So as far as the share market is concerned, that's saving costs, that's boosting profits. So the share market should respond positively to these developments as we keep going.
So you mentioned Telstra. It's not just the banking sector then, it's across different sectors as well. But how much do you think that will... I mean, you touch on potential job losses due to the AI implementation, but how do you think that might impact the other side of it, which is the consumer spending in the broader economy? Does that not concern at all?
I mean, those are all issues that are going to be in the mix. But what I'm trying to drive at today is don't lose sight of the big picture. We have this massive tech revolution, and this is the point of Commonwealth Bank. It's very easy to get caught up into the sort of the weeds, the minor issues, or the peripheral issues that go around on something. We have a transformational technology in play. So the idea that just because the ASX is on a PE of, say, 19 instead of 15, I mean, that's because the market can see this transformational technology coming through. That's the point of the piece, is to say, look, there is something massive going on here. Don't get blindsided or put off by all these peripheral things, whether consumer spending is a bit weak or retail sales are a bit down, oil's up, down, gold. All these things are, in the grand scheme of things, peripheral, and they'll change in 6 months and 6 weeks. The transformation that AI can put through every single business, especially big ones, is what you have to focus on. So any stock that you're looking at or you're holding, you say, is AI a benefit to this business, or can it be a benefit, or is it going to be a victim of AI? The things that you refer to, the consumer spending, I don't know. We don't know the answers. For every job lost, there may be one created somewhere else. That's what history tells us. Anyway, there may be jobs in 5 years that nobody's ever had before. So we have to see on that front. But right now, we can sort of say, well, if you're scared of being in the market or worried about whether it's overpriced or what, I say, well, again, this transformation is not going to stop today. It's going to run for years. And so you have to think of it, or at least the way I think of it, is like social media 10 years ago, where you go, you could have talked yourself out of Amazon for years because of the US economy, when the fact was all you had to do was buy into that and hold on.
You mentioned, yeah, so talking of Amazon, like that was traditionally has always had a really, really high PE ratio, right? And you mentioned PE as a metric. But had you just gone with that 10 years ago, who'd have thought Amazon's PE just gets higher and higher and higher, right? Or it has done in recent history. How important do you look at that metric at all, or is it like is would you say like yeah, another thing you say you end on is that investors thrive on narratives. Like, is that sort of more what you focus on?
In terms of the PE, it's a very difficult one because it depends on the type of business. So if you're going for, generally, I would say it's not a particularly reliable metric because you can have a PE of 20, 30, 200, 60. It really is independent of, or it's not a fixed measure, if you like. You have to factor in a whole bunch of other things. So it's not really a massive thing for me. But the second one, about the narrative, I think is important. So if we go back in terms of context, if you're watching this, last year it was all about potential recession, high interest rates, Ukraine, pressure. People were scared out of the market. So for me, of course, I want to know what's going to bring people into the market. And I can tell you that if you're watching this, the volumes in the Aussie, certainly the small cap sector, but even the market itself, they're not that high. Even though the market's at all-time highs, there's no wild speculation going on. It's not like people are throwing money crazily into the market. It's still quite a tight, difficult market to trade at the moment, except for a few select stocks. But you think about it in this context. Well, what's going to get people excited? What for people to drive a bull market in stocks? They have to believe that there's something really powerful going on or exciting, and that's when you start to get the speculation and people start just throwing money into the market because they want to be involved. At the moment, we don't really have that in Australia. In the US, it's happened in the big stocks. AI has driven those big ones up. But it's also fundamentally based in the sense of Nvidia for example, is making, just staggering amounts of money. But I think as this vision starts to come through and people start to interact with AIs in their daily life, it's in the new iPhones and that type of thing, starts getting applied maybe in their businesses, they start to see some of that happen. They're going to go, well, logical extensions go, well, how do I get involved with this, in the stock market or in other ways? So just to me, I mean, I've been saying since last year to buy up the market. It's like, well, what's something that can keep pushing the market up? And to me, it's going to be AI and automation. Or, for example, the miners, Fortescue came out, they're rejigging their entire mining fleet. BHP is doing it overseas as well. So you've got these big structural shifts going on. But if you're just grabbing off headlines every day, you're not gonna see the big picture. You'll get spooked out because of what's going on in the Middle East and all this type of thing. So, to my mind, we've got a real big structural shift that could run for years.
And we're coming up to about next month, it'll be 12 months when you stood up in front of a load of people and said exactly that, and the market's only gone up since then. Given your final question, Callum, given your optimistic outlook on the share market then, due to the AI's potential, do you have any advice or takeaways for any investors, specifically small cap investors, looking to capitalise on that trend, but without exposing themselves to undue risk? Is there a certain company that you would go for, and is there certain companies that you would steer clear of, just in a general sense?
Steer clear of. I can't think of any off the top of my head. We've had a big winner in my service called Nuix, my service is Australian Small Cap Investigator. Now that's up nearly 550%. I've alluded to that a few times in Factile Daily recently.
Yeah.
So that was very undervalued. Now clearly it's coming through. Now I have the view that it can keep going, but clearly the risk versus reward is a little different to what it was previously because it is starting to get fully priced in. But there are certainly others. There's another stock called Imdex that I quite like. So, I say quite like. I do like it. It's a recommendation. but it works in the mining sector, dealing with the guys' exploration. But they have the ability to aggregate the data from all that and use AI to analyze and that type of thing. What we quite haven't got at the moment is the big spending of the exploration cycle. I believe that's coming, so Imdex is well placed to capitalize on that when it does come. So there's one particular example. Other ones I think we'll start to see creeping through, but I just want to see more evidence that it's going to boost their margins or revenues and that type of thing. But definitely, it's what you have to be watching for.
Would you sort of steer clear from sectors or companies that are threatened by the cost cutting nature of AI then?
Well, I would. I can't think of an example on the stock market where AI is a clear threat to its business. But now that you mention it, there was one.
fair
Oh, sorry. There was one in the US actually that I can't remember the name off the top of my head. But I think it was last quarter, they came out and said, we're a little bit worried about what AI might do to some of our business, and the stock absolutely got cut in half on the day, I think. So again, if you're trading or investing, you have to be aware: is there a chance? And that was just from the CEO sort of flagging it as a risk. I don't think it had even happened yet. But if the market sniffs out the potential for AI to disrupt the stock, then you find yourself in trouble very quickly. So in terms of risk, absolutely, am I watching for it? I can't think of a specific example now of one that I would say short for or what have you. But when I'm looking at my recommendations or potential businesses, absolutely, you have to question: is this vulnerable to disruption?
Cool. Well, we'll end it there, Callum. Thanks for your insights. If you'd like to read Callum's piece, we start with the blue chips and end up with the small caps, as we always do with when Cal's on the case. So thanks for your time, mate. I'll chat to you again next Wednesday. If you would like to read Callum's original article, it's 100% free. Go to Fat Tail Daily. The link's in the description below. And, of course, sign up for the further daily insights ongoing. Thanks, Callum. I'll talk to you soon.
Pleasure.